The final session of the day is with your fellow coaching group member, Abdullah, who's going to teach you the amazing untold tips and tools to learn accountancy. So please welcome Abdullah.
This seminar is for you if you're a director, owner, manager of a business. You is a non-financial manager. You haven't had accountancy training before. And wishing to get a complete awareness and understanding of accounting in an easy and fast way. It's practical. By that I mean the follow-on sessions. Today is about information, it's about awareness. You can learn accounting and use analysis tool to run your business better. You alleviate the stress to lack of knowledge of accounting. When you learn about accounting, you will have confidence, better confidence in running your business because you understand number crunching and numbers related to your business. And hence improve your business performance. And if you haven't done it, you will learn it and you find out how easy it is. You will be very proud of yourself. What led me to this seminar? Over the years, I've been helping, advising loads of businesses. In a minute, I'll talk about myself. Often people have a phobia of accounting. When it comes to numbers, they shut their mind. And that is basically maths are taught badly in most classes. And they have a bad experience from numbers. And accountancy is taught by accountants that they are not teachers. Later on, I will talk about one of the accountants that asked me to go and teach accountancy to a number of high-profile clients for him. And most accountancy, most seminars, I'm assessor of business advisors and business trainers. When I sit to observe an advisor or a trainer, the very first thing they talk about, they go to balance sheet and profit and loss. You got to understand, you got to go through the basics first before you learn the big stuffs. Basically, learn to walk before you run. Yeah? And my job today is that simple steps. And also, accountancy is shrouded in a lot of jargons. It's a sort of professional interest to keep it tight and keep it a little bit of mystery to it. What I'm going to teach you, I learned it from very young age. Basically, when I was 9 years old, I come from a business family. From age of 4, I was dragged into shops. Age 9, one day I was in the shop. My brother and shop assistants were very busy with serving customers. In walked a customer. And I got up and I said, "Can I help you?" Then later on, my brother asked me, that was the very first time we did business. I said, "Yes." And then he said, "You got to know how business works." And I said, "Yeah, I know how business works. You buy something, you sell it for a little bit more, you make a profit." So, what I'm going to teach you, a few months back, I had a 3-day starting in business course, and day 2 is whole day is about accounting and taxation. An accountant was there on day 1, said he won't come for day 2. But then the people said, "Oh, lucky you," etc. And then he said he will come and help. What I'm going to teach you in this hour, after that he raised his hand and said, "I wish this was taught in my first year of when I started to learn accountancy." Why then, you might think, if it is so easy, why it takes so long, years of degrees and HNDs and certificates and et cetera, et cetera. You don't need to become an accountant. You want to learn your business better. So lots of accountancy, things you learn in accountancy, 80% of it has no practical value for you to run your business, basically. It makes you a good accountant. My background. I said from age of 4, I went to business. If you look at that way, I'm 60 this year, so I got 56 years of business experience. I got various business degrees and qualifications, helped over 70,000 businesses, individuals, groups, smaller one-person businesses to multinationals, won several awards. What is my motivation? I'm coming back from 5 years of break, back to business and helping, advising, teaching. Why? Because I want to help, and I want to help myself, help others. And I do this course because people have apprehension. They don't like accountancy, they are not comfortable about it. So I thought I developed a system which about 5 years ago I marketed, and I've been giving it away. People buy it from me, and over the years I saw that lots of people come back with really good feedback and comment, and I market that one as well. What we're going to talk about today, the basics of accounting, basically ABC of accounting, how it works. Why keep financial records? What to do with financial records? And common mistakes that people make. The basics of accounting. See if you can answer these 2 questions. How does business work? This was the question that my brother asked me. Any suggestions? Okay, yeah, that's a good answer. Then what about this? What is the oxygen of the business? Absolutely, money. That's what business is all about. What are the 2 things that money does? Money, it comes in, and then it goes out. That's all what accounting is all about. You got to know where it comes, you got to know where it goes. Simple, eh? Comes in, goes out. This in and out, you need to know where it came, where it went. You need to keep a record of that. That is called bookkeeping. Bookkeeping is simply recording transactions. Ins and outs. And accounting is as simple as this. If anybody understands what I'm going to show you next, you would really understand. This is the essence of accountancy. That little formula. So what does this mean? You got to know there are 3 ways that money comes in. 3 ways that money comes in. 2 ways it goes out, and you got to have left with a little surplus. You're in business. Yeah? So what are the 3 ways that money comes in? So income, outgoings, surplus. The money coming in, you invest your own money, own capital or shareholders' capital. You go and borrow money, and revenue, the money that you get from your customers, sales. What are the 2 ways that money goes out? The money that goes out is expenditure. Now, accountancy is full of jargon. Sometimes contradictory words means the same. Sometimes for the same thing, there are 4 or 5 different words, which means exactly the same. The 2 ways that money goes out is one is capital expenditure, what you spend on things you mean to keep. They have ongoing value in your business. Fixtures, fittings, machines, equipment, tools, technology, all that. And then revenue expenditure is the day-to-day running of the business, the bills that you pay. Why keep financial records? First of all, you must keep records legally. It's your obligation to keep records. Up until a few years ago, you needed to prove transactions rather than show records. You could give tax office a box of receipts and invoices, and this is my income and expenditure. Not anymore. You got to keep proof of transactions as well as records of transactions. Keeping records helps you to make better decisions. Basically, it gives you your history. When you look at individual transactions, doesn't mean a lot. When you put them together, it translates itself into patterns, and those patterns tells you the pros and cons and the highs and lows of your business. It helps you to increase your profit, and it helps you to run a better business, a successful business. It helps you to know your income and expenditure. 6 years you need to keep your records. Yeah? So you got to have a filing system that lasts for 6 years. It also helps you to know how much tax you're going to pay. For a lot of businesses, tax comes as a surprise to them. If you have a better record keeping, every day you would know what would be your eventual tax payment. Proportionally, of course. It helps you to understand your costs. Later on, I give you some examples of when people understand their costs, they can run business better. It helps you to calculate your break-even, survival, basically. What is your minimum requirement? So what to keep? Keep all invoices. These are proof of transactions. You file these and you record these. Receipts. Bank and supplier statements. Check stubs. They're going out of fashion, but still they are proof of transaction. And your records. Therefore, you got to have a filing system that lasts 6 years. That 6 years is very important, key thing to remember. Once you have it, once you kept record, what do you do with it? You prepare 3 crucial reports. The reason you need in and out, because you need 3 financial reports. The first one is trading and profit and loss report. You want to know what you got for your efforts. Then you want to know what is the state of the money, cash flow. Then you need the balance sheet. What is the worth of your business? Yeah, let's see the logic, how that all come together, and what does it mean to you? Make sense? Business is all about money. This is called finance. The fancy word for money side of the business is finance. And finance is organized by accounting. Accounting is divided into two parts, two branches. Financial accounting, which is day-to-day accounting, and management accounting. Financial accounting is divided into two steps, two parts. Bookkeeping and financial statements or financial reports. Bookkeeping is you keep your record, and then the purpose of record is to put them into reports. What bookkeeping does, it gives you your data. Reports gives you information. Data is about the past. Those records are all about the past. What you do with data, you summarize this. When you summarize the data, it provides you with information. What do we need information for? That's what we need the information, to make decisions. So the records are about the past, is your history. Information is about what you do with it. And decision making is about the past and financial planning and forecasting. We try to go through a very simple exercise to understand profit and loss, cash flow, and balance sheet. It is really simple. Why people make things complicated? This is what people do. They are in here, but their systems and accounting and software, everything they do is for that stage of the business. People overcomplicate things. The best way to run business, the efficient way to run business is this. Gradual growth. Yeah. When you are here, your system, your accounting, your bookkeeping is suitable, got to be suitable to that stage. And when you are there, it got to be suitable for that stage. So let's just start from there. Let's look at 1 day of trade, selling these pens. You had £50, you bought 10 pens, each for £5. You sold each pen for £15, but 7 people told you they're going to pay you tomorrow. You're happy with it, that's fine. You paid £2 bus fare to go and get these pens. You paid £28 rent for a little stall to sell it from somewhere. And you paid £35 to promote your business. Let's look at how the trading and profit and loss is done. Trading and profit and loss report has 3 steps. First, you summarize your sales, total your sales for the day, for the year, for month, whatever it is. So the first job, first activity is from your record to total all the sales. Then total all your direct cost. That is your second job. Take away the total cost from the sales, gives you gross profit. And once you have the gross profit, the third thing you do is to total all the indirect costs, the running costs, the expenses. And take away from gross profit, that gives you net profit. So there are 3 simple steps. It doesn't matter how big or how small your business is, it always goes through these 3 steps. This net profit is yours and you pay tax on it. Now, if you are offering a service, your total sales and gross profit is the same. You don't have this second line. You have a 3-line account. Sales, indirect cost, net profit. Those people who offer a service only, they don't sell any product, they don't make any product, they have only sales and expenses. Then we need to have the cash, state of the cash. This 150 is a combination of people paid you, people not paid you. Whether people paid you or not in the profit and loss, you put both the cash as well as the credit. In order to understand the state of actual money, you need the second report, financial report, and that is cash flow. There's two simple activities. Total cash coming in minus total cash out. Total cash in, you had £50 yourself. You sold 10 pence, 3 people paid you 45. 95 cash came to the business. Cash out, £2 of the expenses plus the £50 of the profit, that comes to 115. Balance sheet is assets and liabilities of the business. This is the format of it. These three format is universal. Anywhere in the world, you do it all exactly the same for any type of business. So the very first thing to include there in the balance sheet is fixed assets, then current assets, which is stock, debtors, people owe you money, and cash. Cash from the cash flow report. And you take away the liabilities. There is no liability. You paid for everything. You haven't used the overdraft. You paid for the funds. Take away current asset from current liabilities from current assets. That gives you a net assets. Your net assets are £85. At the end of the day, your business got to account for £85. By the way, all of this up to here is when my brother asked me how business works. I said, you buy things, you sell things. I gave hundreds of reasons. Then asked me, what are the two things money does? I said, you buy your happiness, buys you cars, buy you this, buy that. He said, no, it doesn't do that. It just comes in and goes out, and taught me all of that. Yeah. This is up to here, the three reports and balance sheet and everything I learned when I was 9 years old. Yeah. What does the financial report tell us? He told me the trading and profit and loss report and cash flow and balance sheet. Trading and profit and loss report is about growth. You started in here. At the end of the day, you did business. You started with £50. At the end of the day, you ended up with £85. That is growth. That's what profit and loss tells you. What is cash flow about? Cash flow is about survival. In most countries, including Britain, there is a law. The law says, if at any given time you cannot pay your creditors, you must not continue trading. You must stop trading. If you can't, there is no way of paying your bill. If you continue, you're illegal. So in order to keep legal, in order to survive, you need to have the cash flow. Keep a close eyes on cash flow. It's all about survival. What does balance sheet tell you? Balance sheet tells you the worth of the business. If you want to stop, if you want to sell the business, on paper, what can you get from the business? Profit and loss makes your business grow. Cash flow helps you to continue, and balance sheet gives you the value of your business. The mistakes people do. If they think there is a chore, accounting is not for me, accounting is for somebody else, I have to outsource it, I don't need to know about it, it's a big mistake, really. I'm on for outsourcing. I'm on for do what you're good at and do more of it. But always, there are certain aspects of business you got to know in order to run business better. And this is one of them. And as you saw, it's really very simple. It takes a little bit of open mind, and it takes a little bit of exercise, a little bit of homework to get it into your head. Once you understand and put it, the penny drops, then you make better business decision. It stays there for life. So the three things people do, first of all, they ignore accounts in bookkeeping. And then there is a mad rush at the end of the year. And it's almost certain that you would lose money because you don't remember transactions. If you ignored it, you haven't kept proper records. And you pay more at the end of the day. And accountants are honorable people, but there are one or two that you leave yourself at the mercy of them. Whatever they say, they might bamboozle you. Some of them. Or what people do because they don't understand it, they go and buy very expensive software. And they realize it takes them a couple of months, couple of weeks, maybe more, to learn it. And then they realize 90% of that is not relevant to them. So the basics of accounting is in and out. That's all it is. You need to keep the records of in and out. And once you have that kept records of in and out, then you need to create financial reports. And financial reports tells you the state of your business. And you avoid those mistakes. The best way to do it is to learn for yourself. And as I show you in this just 1 hour, the profit and loss and cash flow and balance sheet, people go and learn it 3 years. Yeah? But you can just do it in 4 sessions. Why doing it for yourself helps you? I'll tell you some of stories that looking at people's accounting changed their business. These Malik brothers, they had a shop and they said they have 10,000 products. When I went to see them, they had 10,000 products. But I saw cans of beer still at the back of the fridge that 8 years out of date. I saw fruit conserves and things like that. They were on the shelf easily 4 or 5 years out of date. 2 flat above the shop, full to the brim with the stock. Eventually, I helped them, I advised them to reduce the shop to 1/3 of its size. From the accounts, I could see they don't need 10,000 products because over 70% of their income was from about 800 products or so. They had 14 employees in that shop. I reduced it to 5. I reduced the shop to 1/3. They took on board all the recommendations. And we could have not understood this unless they had a good record. What happened 18 months later, the profit was down by 10% of the last 5 years average. We got rid of 3/4 of 2/3 of the shop, but the profit only suffered 10%. But at the same time, the rent from the 2 flat above and the 2/3 of the shop that they emptied was 60%. So the profit reduced by 10% from the shop sales, but in actual term, increased to 150%. It's a bit for forecasting. This was a chap that came and said, I want to run a falafel business. And he wanted to do it from a market. When we looked at this is Prince's Trust, I was his mentor. After 6 months when I looked at the records, I said, this business has a lot of potentials. And we did a bit of financial forecasting and I showed it to him what he can do. That was 4 years ago. Now he has 5 shops. So what accounting helps you is to look at each part of the business and identify efficiencies. identify what part of business works, what part of business doesn't work. It keeps track of money owed to you. And it's an excellent tool for growing your business. There's another business that I helped, Purecom. There was a chap that wanted to sell telephone services from his own house, basically. But what he had, the experience he had, the accounts that he showed me, said it makes sense that you get out of that house to a little office and have 1 or 2 staff. That was 3.5 years ago. Now they have 2 business and over £5 million turnover. Somebody started from corner of the bedroom, but once he understood the accounts and once he understood where the key areas of business are coming, he changed his focus from individual businesses to slightly bigger and better businesses. I could show you a fast-track method of learning accounting that you could do it for yourself. Receive a step-by-step instruction. And I call that Actions Effective Accounting, which I helped run this course about 5-6 years ago when I did a bit of calculation. Over 200 of these courses I ran with the 2-day course for businesses like AstraZeneca, Rolls-Royce, etc. And a lot of those courses that I have run come from recommendations from the accountants that I ran the courses for them. We could do, this is the program. Session 1, which is about 3 hours, principles of accounting, show you how to really do the bookkeeping, how bookkeeping works. The 3 financial reports give you exercises that you could do it yourself, and more importantly, understand what you can do with them. Management accounting, which is all about decision-making, forecasting, and taking your business to the next level. And financial planning. Management accounting about analysis, and follow on from that is financial planning. And these are some of the testimonials from people. Terry was interesting. He said, Abdullah, I never ever learned this. I can never add 2 and 2 together. But by the end of the day, he took a lot of exercises. 3 months later, he said, give me any account and I do an analysis on it. He enjoyed it. He loved it. He got so immersed in it. This is an accountant that recommended me to loads of companies to go and do this 2-day training for them. I'm grateful for it, that he introduced me to very big names. And I guarantee anybody in my training that at the end of those 2 days, you will understand accounting and you would understand what to do with it. Something that takes people years to learn. And the reason I do that, because I don't teach it like accountants. I teach it as I learned from my brother, basically. Those are my contacts. Anybody interested? You can follow me, Facebook, etc., etc. This is what I produced, a software that would do all of this at the click of a button, basically. It will, you put input and expenditure, it will do all your accounts for you. And soon it will be on my website. Thank you very much. That's it.
Thank you very much, Abdullah.